Got it here.
Cool.
All right. All right. Welcome, everybody. Thanks for joining us. We'll get started here in just a minute. Um, we had well over 100 schools register for today, so I want to make sure everybody can hop on. I'll go through some logistics and housekeeping items. Um, for today, again, this will be recorded. Um, any slide decks, any resources, we'll make sure it gets sent out an email following, but you'll receive the recording typically about 24 hours after, and that'll come from Zoom. And for today, certainly, use the Q&A feature here inside Zoom. If you have any questions during or for Q&A time at the end, go ahead and use the Q&A functionality. And I was going to say that. I know there's always one more thing. At the end of today's session, there should be a end of the webinar survey. Again, let us know. We're doing these every single week, and we appreciate you taking the time and let us know how you like these, what you want to learn more about, what you found most helpful, and anything that we can do to continue to improve these. We want these to be a really great resource for you as we talk about a variety of topics from I'm always talking about marketing, and then today we have on the topic of budgeting. So we want to cover a variety of topics when it comes to the leadership and the growth of your school. So if we haven't covered something that you would want to talk about, let us know. Or if there's certain topics you'd love to hear about, again, continue to let us know. So today, with us today, we're going to be presenting. I'm going to turn things over to Marc Seldin. So Marc, I'm going to turn it over to you to kick us off.
Sure. Thanks, Clint. I'm Marc Seldin. I'm the founder of the Center for Guided Montessori Studies. I have an MBA and a doctorate in educational leadership. I've also founded and currently own two Montessori schools. And I'm going to talk to you about budgeting, which is actually one of my favorite topics. And I may be the only one in the world who feels that way. I understand it's not exciting, but it's very, very powerful tool. And so just to uh, get us started, I want to ask you all whether you currently budget. So just yes or no, maybe put it in the chat or if you want to raise your hand, I'd love to hear what people are doing right now. Karen Gill. I'm not sure how to let Karen speak. Clint, do you know how
Um,
to let her do that?
let's see. I don't know if I have the ability. How do we do
All right.
that? Do we go into participants?
Yeah, but her
I
hand
don't.
isn't raised anymore. Uh, does,
Okay.
does
There's a
anyone?
lot going on in the chat. I don't know if you see. Do you see the chat, Mark?
Yeah, I see the chat.
Okay. Yeah. It looks
All
like
right.
a lot are saying
All
yes.
right.
They
All right.
do.
Well, I'm really
Uh,
glad to see a bunch of yeses.
I yeah.
Oh,
Hi
that's
guys,
good.
I'm here. I'm on my cell phone, but I'm here.
Yeah, but you're labeled as Mark
Uh,
Powell.
from the health, there you go.
Okay,
Can't do much about that.
so the one who's labeled as Mark Powell is Tim Selden, the founder of the Montessori Foundation, and yes, my father. Karen Gill says she wanted to let us know that she budgets and she loves to create the budgets. So yay, Karen's part of the fun budgeting team. It's uh it's an amazing document, and we'll talk about why a lot of people resist creating it, and when to do it, and all that good stuff. So let's just go ahead and get started. Um, let's
I think
see if
Lindsay Pollack is looking for a panelist invite. And if I'm understanding, are we recording yet?
it says we're recording. Yes.
Yeah,
Terrific.
we are live.
Okay. Hi, Clint.
Yeah.
Hey,
All
Tim.
right. All right. So let me go ahead and get us started. All right. So the power of budgeting, right? Getting control of your finances. Um, so we'll be talking about how not to run a school financially, why people don't budget, the benefits of budgeting, the types of budgeting, well, less on that, but the process of creating a budget, cash flows and variances, and what you can do with these powers that it will give you. So we only have an hour. I need to leave at 2 on the dot. So just to move through it. Uh, we've all seen this, right? The see no evil method. It's working. I'm not going to look at it, right? I'd rather not look at my bank or anything else as long as I know it's okay. right? Which often leads to this feast and famine approach, where I feel like I'm rich right now, I feel like I'm good, or that we're doing well, and then we spend and we spend, and then there's no money left, and things get tight. Um, Finance by proxy is when you have someone else to take care of it for you and you don't really quite know what's going on. It's not unusual for a school head to be more passionate about the education than the business side, and there's no harm in that. But the consequence of getting someone else to just manage all the financial piece and leave you out of it is that you're missing a key part of school leadership. You're missing a key insight into what's going on at your school, and it sort of disempowers you. So I wanted to hear some horror stories. What else have you all seen when it comes to financial mismanagement of a school? Any stories there? No, nothing in the chat? All right. Well, I definitely have seen a lot of financial mismanagement over the years. Tim, what have you seen?
Well, I've seen all sorts of things, including assuming everything is okay, and all of a sudden the bottom drops out, and you're suddenly scrambling and you're out of money, or you have somebody makes a really serious bookkeeping mistake. I remember having that happen once, and we ran out of money in October because somebody double entered an asset incorrectly. So I think, having first off good financial records, and secondly, having a good projection of what you think is really going to happen, and then paying attention to see
Right.
whether or not reality is consistent is a good idea.
Yeah, definitely. Michelle Wagoner shares that she has or had a bookkeeper who thinks they can cut a budget in half because they close a classroom. That's scary, right? So there we get to the difference between fixed and variable expenses. Yeah, Alona Zmitrovich, I hope I'm saying that right. I'll trying to. Says that one of the big mistakes is you kind of budget, but you allow some expenses because you want to support teachers. It basically, I've seen this all the time, right? Someone comes to you and they want something, it seems small or reasonable, and next thing you know, you're outspending your budget because all these little things add up, right? It happens even to the best schools can do that, right? Classrooms, someone says, I just want $50 a month in classroom supplies, right? Multiply that times the number of classrooms. And then, if your budget's tight, things like that can actually cause a real problem at the end of the year. So thank you all for sharing those things. We know bad financial management has real consequences, right? It's not just an abstract thing. It affects who we can employ and affects the children that we can serve. If we're in bad financial states, we might not be able to give as many scholarships, for example, or provide as many services. Why don't they budget? Or why don't people budget as thoroughly or as often as they should? Often people are afraid of what they're going to find. It just seems like a big pile of anxiety, right? It does seem like a lot of work. A lot of people aren't sure where to start. It's just maybe uncomfortable for them. It's not in their comfort area, right? Then there are people who feel like, well, look, I sort of know what the budget's going to be. I know what more or less what we're going to make this year and what's the benefit, right? It's kind of like that idea that I have a lot of checks, so I must have a lot of money, right? Um, everything seems okay, right? I see money coming in. It seems like we're all right. It doesn't really help me plan for March, but yeah. And of course, we're all busy, right? And I'm pretty empathetic with that. I've got plenty of businesses to run myself, and it's really hard to do the best possible job in all possible roles. And so sometimes we got to let things slip. So I'm here to argue why budgeting shouldn't be one of those things. So when to budget? We talked in an earlier webinar that tuition setting should actually come first, right? And that's important. It's because a budget can only tell you the lowest your tuition can be. As I said in that other webinar, you got to figure out the right number for your school. Obviously, you don't want to go below your lowest number, right? That is going to be important. If you budget and your tuition just is not sufficient, then you better ask yourself some hard questions about your business. Am I serving the right people? Am I right about what the highest my tuition can be? Can I go higher? Um, what can I do to look at my expenses or my customer acquisition cost and all these things? Um, but the goal is to set that tuition first, right? And then budget. And you should be doing it every year. And a really, really important thing that I talk about as the leader's wrench is reviewing the budget, looking at those variances. Like every year, don't wait for the next year to look at the budget. And you try to look at it throughout the year to see, was I right? Was I wrong? What's different than I expected? So we'll talk.
There's another piece about that. Quite often, we're setting the budget about this time of the year, and it's usually for a period of time that's going to start in the summer, and it's going to run for another 12 months after that. And quite often, we don't have an accurate understanding of what the real costs are going to be. They can go up higher or lower.
Right. Well, we'll be talking about that for sure. Yeah. All right. So, the benefits of budgeting, right? It helps us to plan, right? It helps us to understand, how do our schools work? So planning, what's going to happen in March? What should I do over the summer? Should I avoid opening that classroom? Is it better to open another elementary classroom or another children's house classroom? Helps us to plan around uh, potential cost increases or even experiment with different tuitions. It helps us to understand what our problems are or where our difficulties are. If we're having a lot of expenses, you look at yourself and ask, well, do I need to be spending $1,000 a month on staples or whatever? Knowing where your money is going is very helpful. So budgeting lets you fix problems, right? So let me talk about operating budgets. There are lots of kinds of budgets, but that's what I'll be talking about today in the little bit of time we have together. So our three goals are going to be figure out your net in your period. And our period is going to be a year, right? So we want to understand how the school is going to do overall. What's called profit and loss over a period of a year. But also we want to learn more about our business, as we said earlier, that understanding piece, right? And we're hoping to create that when we create a budget, it's actually a tool that we can use and reuse, right? It's going to help us project changes, the what ifs, the experiments, right? By the way, I can't see the chat right now, so if there are any questions, please someone interrupt and tell me. Okay. All right. So back to starting from scratch, right? So this is the thing. Many of us already have budgets, but they're kind of outdated. Starting from scratch is uh, one of those techniques that everyone looks at with a little bit of trepidation, right? That means you have to look at all of your expenses that you've had and all of your sources of income and figure out where it's all coming from and where it's all going. Um, it's not necessarily the most fun thing to do, but if you're starting from scratch because you don't have an existing budget, that's the way you have to go. In other cases, the budget is so outdated, you may as well, right? You may as well. And we'll talk about how to do that. So many people do find it easiest to go classroom by classroom. That's not necessarily the best approach, but there's nothing necessarily wrong with it. I'll show you how I do it in a little bit. Yeah, obviously, you're going to want to categorize your expenses. So administration, facility. I have things like utilities, right? Marketing, accounting. So, and then we have this question about how are we going to go, right? How are we going to calculate these numbers? So the simplest thing to do is a yearly budget, right? That's where you say, well, over the course of the year, this is how much I expect to spend on utilities, right? This is how much I expect to spend on salaries, or insurance or what have you. And that seems like a reasonable thing to do as a first step. The problem with that is it doesn't actually help you identify difficult months. It's perfectly fine if you have good numbers as a means to understand just sort of the big picture of what's happening in your business. But I actually recommend that you also do a monthly budget. And that'll give you a chance to look at your cash flow. So this is the question about when you recognize a transaction, right? So an accrual system, which many of you already will know this, but in an accrual system, we just say, hey, uh, I sent an invoice. The money is now attributable to the time where we invoiced. Whereas a cash, based accounting system is going to recognize that cash when it hits your bank. I think accrual is really great for certain kinds of planning, especially when you're looking at larger periods. But a cash-based system can be far superior when it comes to just, especially if your budget's tight, for understanding where your money's going in any given shorter time frame. So your information sources. So if you're starting from scratch, you're really going to have to do archaeology, and that means going into your bank statements, right? It's not enough to just think, what do I think I spent, right? You want to know what you actually spent. So start with January, or if you're on a school year, start with whatever month your school year is, July maybe, and go through that bank statement and see where every single dollar went and categorize it, right? So you can say, last year in July, I spent this much on rent, and I spent this much on supplies, and this much on salaries, and da 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 da. Um, it's not the prettiest thing to do because it does take time, but it's not actually that hard. What you've done at the end of that is you have a really good sense of what your income was and what your expenses were per month. Now, if you are a person who regularly budgets, like many of you have said, then you're a little bit ahead of the game, right? You can just go ahead and take the previous year's budget and ask yourself how accurate it was. In that case, you may want to still look at some bank statements, but you won't necessarily need to look at every single one with that same level of detail. You are going to want to understand whether, to the degree to which you were accurate or inaccurate. Once you have all of your information in there, basically, what did we do last year, and how right was I? Then you can start thinking about what I expect to spend next year or this coming year, right? So obviously, we need to understand where we are, what are our fixed costs, what are our variable costs. Keep in mind that all income is variable, right? So, per pupil, but your costs are going to vary, right? You have your central office costs, and then you're going to have your per classroom costs, right? So if I shut down a classroom, what does that do to the budget? As we heard earlier, right? Who was that? Alona said that, right? Or no, it was Michelle Wagoner said, yeah, I mean, the person who thought they could just cut the budget in half by getting rid of a classroom, right? So budgets are complex, right? Often in Montessori schools, they have a step function, meaning we're making profit, we're making profit, we're making profit, or at least things are going in the right direction. And then we have to open a new classroom, right? And now our fixed expenses are higher because we have all those materials, we have all those staff members, right? So suddenly it jumps up, right? Our expenses are going to suddenly jump up. And so then we need to increase revenue quite a bit to go back to being net positive. So understanding where we are, I do recommend you look at every classroom, not necessarily to create your budget on the spreadsheet, but to understand your school. You do want to figure out those central costs, whether it be your copier, shared supplies, snack, all that stuff. And also you have your known annual expenses, right? Obviously we have the salaries that we're committed to paying. And maybe we put aside other things like insurance or accountants, tax prep, whatever. And then we have questions of safety margin because there's a lot of things that you can't quite plan, right? You should always put that into your budget. I always recommend a safety margin. So budgets are going to include events that are periodic along with those that are not. Right? You have your prepaid tuition, right? That's always a question, especially for those on a cash-based accounting system, right? Do I really want to recognize $400,000 in revenue now, and then maybe be hit with the requirement to do a quarterly income tax filing, right? A higher one. So it might be better to be looking at that in an accrual fashion, right? And then we have our annual expenses like insurance, right? Taxes, and then the uncertain things, right? Your facilities break down. Materials need to be replaced. Of course, you know these things will happen. You know there's going to be a repair. You know there's going to be materials that need to be replaced. You just don't know what. You don't know what things. So you can put aside some money for those things, right? Legal costs. Like goodness, none of us really wants to deal with lawyers, but we often do. So it's good to put aside some money based off of your expectations for the coming year. So, and of course, things like substitutes and stuff like that. So, what else can anyone think of? Any other things that need to be planned that are hard to plan?
We have a question here about how much should be in the safety fund. And I
I
just
see
put a
that.
note in the chat that, I personally would recommend between 3 months and a year of money that's in reserve. But in terms of planning
Yeah.
a budget, I'd say you want 5 to 10% minimum above what you think your costs are going to be for the unexpected, because you may
Yeah.
have fewer kids and you may not collect all the money that's contracted, and you may have a roof leak. All kinds of things can happen. So you want to have a reserve not only of cash that you built up probably over more than 1 year if you have a
Mhm.
small budget, but you also want to plan every single year's budget for the unexpected.
That is 100% true. And I would actually go on, I'd emphasize what you said. I mean, ideally a year, that's not always possible. I understand that. If you can sock some cash away in cash-like alternatives or things like equities that are easily um, liquidated, I think, it's obviously not always possible. The school is struggling, you just don't have that. But when you are flush, think about the rainy day for sure, right? Um,
Yep.
all right, let's go on here. So, anticipating the future. So, in theory, what we've done at this point is we've figured out what we've spent, really realistically last year, right? Or in previous years. We either by looking at a budget and comparing it to what actually happened, our variances, or by just literally looking at all of the bank statements and saying what happened last year, right? So at some point you're going to have to say what's going to happen this year. And here's the problem, right? Doesn't matter how detailed your budget is. You have to make some guesses, right? Because the future is, what is it Yogi Berra said? Predictions are hard, especially about the future. Uh, yeah, it's really hard. So we know that a couple things might happen, right? Certain trends. We know there will be some inflation, right? Or maybe we know a certain thing's going to happen. I'm opening another classroom, or I know I'm going to be um, doing this big roof repair, or whatever I need to budget. And the problem is, of course, the world doesn't really work that way, right? There's always the unknown, but we can budget within a range. Um, so, you know, obviously we don't know what the expect, whether current trends will continue. Obviously, we don't know, right? And we obviously don't know everything that's coming, but we start with what we can do, right? So we're going to do some guesstimates, and then anything that we want to spend or we're planning to spend, but we're not sure when it's going to be spent. I'm going to call that unplanned, and we're going to distribute that evenly throughout our budget across the year. So what are the dangers of this approach? So let's look at an example. All right. So here's a really simple budget. It's a one room, one classroom school that also has an administrator, right? Just to show you how this might look, right? Um, we might say that every month we're spending X amount on staff, right? The lead here. These numbers are old, by the way, so you'll forgive them for being very unrealistic. But so we've got a $30,000 lead, a $35,000 head of school. Good luck with that. Um, you know, we have all these things, these repairs, right? We don't know that there's going to be $300 a month in repairs, but we're going to budget that, right? We might know that the rent is going to be $2,000 a month, right? So we'll just put all of this stuff in there to figure out what our monthly expenses are going to be. And then the same thing with our income. We know what we're getting. In this case, we have 5 children who are paying $2,500. Was it $500 a month? Gosh, my parents would love that.
And this is a really old
This is
budget.
a very old example, yeah. But the numbers hold up. I mean, the structure is still accurate. So, based off of what we're planning, we could see that every month there's going to be a positive cash flow of $1,932, right? And if we annualize that, then we would actually says we'd actually lose money. I'm not sure. Expenses. Something's not right here. Sorry, guys. Because if the monthly is always positive, the annual should be positive too. Anyway, there's some number wrong, but we're going to look at a better example in a second. So I'd like to invite you all. I'm going to put into the chat a link for a better budget example. And so this is an example that I built off of a previous year's budget for my preschool Renaissance Montessori. So it is a little bit simplified. It's not 100% accurate, but it's and the numbers are of course also very outdated. But it should give you guys a chance to see what I've done here. So the first thing is to know is that I have some multipliers to experiment. I started with the numbers from last year, and then I'm experimenting with multipliers, right? So what if staff expenses go up 10%? What if all other costs go up 5%? What if my income goes down 5%? And I'm using these to multiply some historical numbers to end up with some scenarios. So just to show you.
There is a general rule, by the way, folks, when you're budgeting, and that is, as you work this out, always tend to assume you're going to get less money in and that your expenses are going to be higher. So be conservative in both directions.
Yeah, absolutely. Though I do like to look at I do like to look at ranges. So I do construct a lot of what ifs. What if this goes up? What if this goes down? That kind of thing. But generally, the best way to plan is, like you said, your costs are going to go up and your income is going to go down, and be happy and surprised if it goes the other direction. All right, so the structure I have it here is a monthly basis, and I've done this all on a cash basis, so I can actually look at my cash flow. So in August, the school received, or is projected to receive, most of its income, right? So 387,000, and that's because so many people are doing the prepaid option, which we like at this school, because that gives us the predominant amount of money at the beginning of the year when a lot of our expenses are incurred. All right, but then looking through all of our tuition agreements, we can project in a given month how much we are expecting to receive as of right now. Some of this may go up or may decrease depending on enrollments and disenrollments. But that's basically what we've done is we looked at historical income and we used a multiplier. So in the same thing here with our expenses, I've combined everything here, classroom materials and snacks and all that other stuff, just to make it simple. And I got rid of a lot of categories. The idea is just to show you how I might organize it. Organize it however you prefer, though. So for each category, I have a subtotal. Here's my rent. Here's my utilities, right? All this stuff. Anything that I associate with the facilities, I put here. So let's say I want to budget $500 a month for repairs every month, right? So I'll just go ahead and put that in here.
Mark, as you're doing that, I'm going to offer a suggestion to folks listening.
Yeah.
There's a tendency for some schools to really break it down, like they want to know what the costs are and the income is for every single classroom. And that's an understandable thing and it's useful information, but it does mean it's going to take you a lot more time to do your bookkeeping and your analysis.
Yeah, I
So
think it's very
aggregate,
helpful when you're gathering information. I don't think it's very helpful for planning to look at it per classroom. Um, like to know, hey, this is what I did. It's also because in our heads, that's often how it's categorized already. It's sort of the information is already there and accessible. I can retrieve it from my memory. What happened in the Lily classroom? What happened in the Lotus classroom, right? Um, but definitely, I agree. For planning, how is that going to help you, right? You don't know where the repair is going to happen, right? Um, I mean, it might be interesting to know what your income was per classroom, but I'd say it's more interesting to know it per level, right? If you want to break out your income, I would look at it on a per level basis rather than a per classroom basis. Um, anyway, so these are some categories I have, things from software, marketing, employee costs, the printer, taxes, various random stuff, miscellaneous. You know, you have accountants. I might actually have suggest a professional category that has accountants and lawyers in it, but I didn't do it in this case. Um, and uh, and so at the end, at the bottom of every month, I have my cash flow, which is uh, supposed to be. I'm sorry, this isn't supposed to be cash flow. This is supposed to be monthly expenses. Sorry, guys. Um, And so the expenses per month, you can see they don't vary greatly, but they are projected to vary somewhat. Um, and the cash flow is the difference between, in that month, the difference between income and expenses, right? So you could see for most months, the school will be cash negative. There'll be a few that are cash positive. Um, but that's because most of the income is received at the beginning of the year, right? So at this point, we're projecting a profit and loss of 99,000. So let's go ahead and say, you know what, let's do a safety margin, right? So let's say the safety margin, actually, let's do it here. Safety, right? Emergencies, emergency fund, right? Right. So let's say that every month we want to have a $5,000 emergency fund. Okay. I'm not sure that's the right amount. I'm just throwing it out here. All right. So I would do for here, I would just add that to here, treat it as a legitimate expense. And now we have our scenario, right? Um, now look what happens here. Now I can experiment with other things. What if my staff costs more, right? You know, that should have been 15%. What if my other costs go up by 20%, right? What if my income actually does go up by 10%? Oops, that should have been 10%. So anyway, it gives you a lot of options to go to play with things this way. This is yours to play with. Anyone who has the link can mess with this. So I hope you all will have fun looking at it and experimenting with it any way you like, or make copies of it if you want to create your own. But this is the kind of thing that I do. I do have more detail in my real one. I do break it out by level for the income, for example. Um, and I do have a few more categories than are on here, but pretty much this is my approach to constructing my annual budget. There are obviously other kinds of budgets. This is more of a pro forma budget, but you can, you know, create the kinds of budget you need for your particular challenge. Are there any questions at this point? Just throwing a lot of information out here.
I see people saying I really like multipliers. Listen, if your school ever feels like you need someone to look at your situation, separate from your accountant, who I assume is looking, we, Montessori Foundation, Mark and myself and the other people at the foundation, we can do that. We do charge a fee to do it, but it can be very, very helpful if you feel like you need someone to look at your situation and offer
Yeah.
you advice about where you are and what you can do to improve it.
Yeah, I'm a weirdo. I love numbers. I'm happy to help. Um,
And
I,
Tim, I would
really fun.
just, hello everyone. I'm Lindsay Pollock from Sarasota University. I just wanted to chime in on that, Tim, because I think it's really important to have someone on your team with an education background,
Mhm.
specifically Montessori background. And while I loved the support that I received from folks in the accounting department and my CPA, it really helped to have someone with that educational background who understood the cadence of a school year and the needs of a school community, in addition to that fiscal management. So, really having someone with that background is so helpful when you're planning your budget.
I see a question from, that's a very good point, Lindsay. I agree completely. And Lindsay is another person who I've worked with on finance things. And she's, again, a lot of us we're not professional accountants. Mark has an MBA as well as his doctorate. But those of us who have run schools, so easy to see someone else's problems rather than your own because emotions tend to get in the way. And now I'm speaking
Right.
from personal experience, not just theoretical. The bottom line is you can sometimes save your bacon by getting good analysis and good help from someone who's not part of your school, who's seen it all, and it can be very, very valuable. Stephanie asked a question mark. She said, if you have multiple campuses, is it best to do a different budget for each campus?
Well, I actually have some strong opinions on this. So let me tell you the positives and the negatives. Obviously, the first positive is that you have a sense of how each campus is doing, right? Is it pulling its own weight? Is something different between the campuses that might point you towards a practice that is better at one than another, right? Some process that is better or some activity that is being done differently. But the thing to be aware of is that it can be very hard to attribute your centralized costs across multiple campuses. So let's say you have one admissions department or one shared, ledger for, for all of your admissions stuff, right? Um, how do I attribute that on a per campus basis? Is it 50-50, right? Or however many campuses you have? This is a very hard thing to do. So my personal opinion is to use linked budgets, but not separate budgets. So in a linked budget, you would actually create them all in, you would create each campus's spreadsheet, but you would have a roll up that includes all of them for the fixed expenses. And you would try using different kinds of activity-based costing. It's a financial term, but basically to try to understand how do I attribute the expenses, right? If you have and use okay, so yeah, so Alona says she uses percentage, and that can be fine. It really depends on whether it's accurate, and I don't know whether it's accurate. You would know, right? I will say that it is uh, it is definitely tricky because you don't want to mistakenly think that one campus is highly profitable compared to another when actually it's consuming more of some big expensive thing, right? So that's why I would suggest, you really look at what are the activities and distribute your shared expenses by activity if you can track those as best you can. If you can't, forget it, roll it all up, right? Because that's the thing. Otherwise, it's useless, right? It's useless to break it by campus if you can't figure out how these expenses are being distributed. Roll it all up and just track maybe salaries and all those things separately by campus. That's fine. But there's just going to be too much that is unknown and it won't help you a great deal. So there was also a question about do we pay for conferences? I do allocate money for conferences for my teachers. I don't pay everything. Every school has a different philosophy on this. I don't know that there's a right or a wrong. But I put aside some money. It's not enough. It's enough to help them if they want to do it. So they have to have some skin in the game, as they say.
Yeah. I think a lot of it depends on the total amount of money you have to spare, whether or not you conclude that this is a good investment. And you have to remember that some of us really think in terms of our national organization like AMI, AMS, and those can be really, really expensive conferences, thousands of dollars a person easily. And it may be that you send one or two people to that, but you look for much more affordable opportunities like the MEPI or other regional or state conferences, and you try to send everyone to that. So again, it's all about philosophy and how much money you have to spend, and whether you think this is a really good investment of money.
Mm. I agree, Tim, and I would just add to that, considering the return on investment. If you are sending folks to a conference, what do you expect them to come back and contribute to the organization? Is that maybe a presentation at a grade level meeting, or is that a presentation to parents, or to write a column? But there should be some tangible benefit to the organization, in my opinion, in return for that investment in the attendance, not only to attend the conference, but then also consider, budgeting substitutes to cover the classroom as well. So that's another cost in attending a conference.
Yeah,
In
that's
addition to
absolutely
travel
true.
fees and all the other things. Yep.
Right, right. Absolutely true.
Yep.
Um,
I,
yeah,
Well, I was going to say, I think the number one thing that you've gotten across as we started was that people who tend not to budget either are feeling emotionally overwhelmed or they're feeling like they're so overworked there is no time. And that, this is dangerous because it's like driving at night with no headlights.
mhm,
And so while all of us can fall prey to that, it's really, really easy to somehow let this slip or assume that other people
right,
are doing it for you.
right.
The more you know, the more likely you are to see the trouble coming and to be
Yeah,
able to try to adjust to it. I guess the
I
last
agree.
thing is do not think you have to go this alone. If you start to feel like you're in trouble and you're
Mhm,
not sure what to do, call for help, regardless whether that's your CPA, your board of directors, your school owner, the Montessori Foundation, Marc Seldin, who loves to talk to people about budgets. The bottom line is get help and get it quick.
I definitely agree, and I'll talk a little bit about that soon. Since you talked about driving without your headlights, so let's talk about our tool. How do we turn on the headlights? I call it the leader's wrench, right? But whatever you want to call it, we need a budget is only useful if you look at it after you created it. Otherwise, it's just a piece of paper, right? Or an electronic document in the cloud that's done nothing for you, right? It's a fantasy, right? It's only useful if you use it as a tool. And that means you create your budget and then you look at the difference between what you expected and what happened. This is the difference between actuals and the budget, right? And we call that difference a variance. So variances are really, really important. There are financial altimeter. You can pick a metaphor. I probably mix them all up. But they're really, really powerful. So to know why something happened differently, right? Oh, okay. So we lost a student, so the income went down, right? Or we gained a student, right? It gives us these notes help us to understand what's happened, right? Um, we might say, hey, this is a variance, but it's not one that matters, right? Like it's $124. I'm just calling it as expected. It's fine, right? But here, you know, uh, we actually budgeted $200 for repairs and we spent 623. Well, there was a burst pipe, right? So again, we knew there would be repairs. We spread them throughout the year. We didn't expect the $200 literally to be correct in any given month, but it did let us know that at this point we are $423 down from the budget, right? If we find ourselves in January and we've already blown through the repair budget, that's time to worry. And that's why this is important to know. right? What is that variances? How are the variances adding up? And so, all these things are are opportunities to investigate, right? Like why were the substitutes higher? Well, we know why. Carlet was sick, right? Well, that's what happens, right? Does that blow our budget? Maybe not, because maybe we budgeted over the course of the year for this to happen, right? We don't know yet. We have to look at that annual budget. But supplies, that's considerably higher, right? That's $170 higher. That's a pretty good percentage, maybe 30% higher. What happened? Okay, so I put a little note there to investigate, right? So it gives us variances give us insight. It's sort of this is the wrench we use to tune our schools, right? Maybe in a given month the variances aren't significant, and that's great. Or maybe you understand exactly what happened, but maybe not. And it's just a really wonderful and powerful tool. To me, this is the biggest benefit of budgeting is these variances so that I can look, and again, I'm a numbers guy. I know it's not fun for everyone, but so I can look and say, well, I expected this much to happen in October, but look what happened. Why, right? Understanding that why, it doesn't usually take that long, right? I'd say the psychological distance that it takes you to get started on this is greater than the actual journey, right? It doesn't take that long to do this, right? We just need to just look at the numbers and just ask yourself some questions. This is what I budgeted. This is what I spent, right? If you have an accounting team, you should just be able to look at your software, QuickBooks or Xero or whatever, and actually see this stuff as soon as they close the books. So putting it all together. Step one, identify our expenses in income, right? So you're going to create that annual budget that includes everything that you can anticipate, along with a little bit of wiggle room, right? That's slush. Break it into monthly projections of cash flow. Again, that's optional. That's something I find very useful, just to know if I'm going to have a cash crunch or some difficult months. And then, of course, you want to use these projections. Use your budget, right? Use it, right? It should be used to track variances. By the way, I have the same problem with vision statements and mission statements of organizations. I don't know how many organizations spend weeks to months creating these mission statements that they never review, right? Like, what's the point? What's the point? I think mission statements are wonderful, but they're only wonderful if you ask yourself periodically, are we living up to this mission? Or is this action, this potential strategy, is this thing I want to do congruent with our mission? So I'd say often it's just a document. All right, so step 5 is realigning your finances. This is like, what happens if you do have a problem? How do you use your budget, right? Well, it's nice when you can grow your way out of a problem, and sometimes that does happen. I just suddenly got 10 new students. I'm great. But obviously the alternative is spending cuts, and they're not fun. They're not. You don't feel good telling people that they can't have as many hours, or even letting someone go, or denying someone's request to buy some materials that they really, really need. So again, the Montessori Foundation is happy to help with this stuff. Got a whole raft of talented people who can help with the process of setting tuition and salaries, as well as creating budgets. Do know that one of the most frequent questions I've gotten is things like, what should I be spending on insurance? What percentage of my budget should be on X? What percentage of my budget should be on Y? How much should be my marketing budget? And I can tell you that for any particular school, there is no right answer that I can give you without knowing your school. In one market, you might need to spend a lot of money on marketing. You might need to put a lot of money aside for legal, right? You might need to spend 60% of your budget on salaries, right? You just might need to. Another market, those numbers might be different. It might be 40% of your budget on salaries. It might be even more on marketing or less. Insurance might be very expensive in some areas. So I can only tell you that it's possible to come up with right numbers, but only in your particular context, right? It would not hurt if you are friends with neighboring schools to ask them what they're doing, because they may be facing some of the same macroeconomic factors you are. in terms of difficulty to hire and, and the cost for this, that, and the other thing. So that won't give you necessarily the right number for your school, but it will definitely put you on a closer track than any random national figure or international figure can give you. So, one of the things that I like about my budgeting is my budgeting process, it lets me experiment, right? With not just multipliers, but it lets us try different things, right? Because we have a lot of trade-offs to balance, right? One of the biggest problems we face is that if we spend too little in some areas, it may be harder to recruit. For classrooms look ugly, they're just crummy, or we don't have the ability to take care of our landscaping, or we don't have money to market as well. So spending money is sometimes a necessity, right? We've got to balance all of the things we have to do with the things we want to do, right? Maybe I have to spend money on marketing, whereas I'd rather be spending it on educational materials. I don't know, right? These are always hard things to do, but with a budgeting process, you can at least experiment with different numbers and see what that does. What is that going to do to my cash flow in April if I do that, if I spend that money then, kind of thing. So, final thoughts. You got to make the time. I'm really happy to see so many people are already budgeting. So again, do it every year. Please look at your previous year's budget against what actually happened. You really want to try to track down if there were big differences, why. That will help you a lot with planning. Don't ignore the numbers, right? It's the see no evil method. It doesn't work, right? If the numbers are telling you something you don't like, believe them, right? The numbers are your friends. They're not lying. So if they say, hey, there's going to be a problem in March, trust that there's going to be a problem in March and don't just hope that it's going to go away. These are your best friends, right? So obviously, one of the things that I want to remind people at the end of any budgeting conversation is that money isn't everything. And that means a lot of different things. Obviously, as school leaders, we got to remember we're in this for education, and we have things that are much more important to us emotionally than money. But the other factor is that money isn't everything to the parents or the staff, right? It's often possible to increase value for your parents or increase value for your staff with things that are not bought, or not very expensive anyway. Occasional lunches, signs of appreciation, creating an inclusive environment. There are many, many things that people value more than the things that we can buy. It doesn't mean you could ignore how your campus looks. But a warm and welcoming classroom environment is the best sales tool you're going to have, right? It's not going to be what you put online, on Facebook or Google or something. So, and lastly, we're here to help. The Montessori Foundation is happy to assist in any way it can. And that is all I have to say for today.
Well, I love it. The only other thing, since Clint isn't here, is no matter how you do it, whether you use Ames and Montessori Growth Suite or you have some other marketing firm, my experience is that most people in the school world do not put the time, the money, the effort needed to make the phone ring. They just don't spend enough on marketing. They assume that it's going to be okay because they run a great program, their current parents are happy, and everyone comes because of word of mouth. And that can turn against you in a heartbeat. So I think there's an old saying, chance favors the prepared mind, right, Lindsay?
Yes, absolutely. You're so right. And the budgeting is key. I so appreciate the tools that you provided, Mark. And, playing with those budgeting templates is really good practice. Even if you have a budget that you've already prepared, to go through someone else's budget, to go through a demo budget, and see if there aren't some categories or some areas, some expenses that maybe you haven't budgeted for in the past that you might incorporate into your current budget. But budgeting is key. And I love what you said, Mark, about believe what your budget is telling you. It's impartial, and it's there to help. It's painting a picture of current trends, and it's really important to be responsive to that. I know I helped a school a few years back, and I kept seeing an item showing up, an outlier in their budget. And I said, well, what is this column? And it was overtime pay.
Mm.
And that was something that the head of school wasn't recognizing, that she had a couple of people who were receiving quite a lot of overtime pay, but if she readjusted her schedule, she could save quite a lot of money. It was in the tens of thousands over the course of the school year. And sometimes, it's that small adjustment that can make it really a more functional and more productive organization all around.
Lindsay, I
It's a
love that
really good,
example because that
yeah.
literally happened to me. I was like, why are we paying so much overtime? Let's look at this, right? Especially because the overtime was often going to our higher paid people. So it was teachers who were being asked to stay into aftercare. I'm like, well, this is crazy, right? First of all, they should go home, right?
Right.
And well, I've been having trouble finding aftercare people. Well, let's put a little more effort into it. Let's find some aftercare people. They'll be cheaper. Our teachers will be happier. They don't want to be here late every day,
Exactly.
right?
Yeah.
So,
Yeah. It was a win-win
Yeah.
to make that adjustment.
We can all think of so many examples. I think of one school that had two CPAs on their payroll. One of them, turns out, when I watched her, because I was trying to figure out what is the second CPA doing, $50,000 a year person like 20 years ago, and so all she was doing is taking the pizza orders. The bottom line is, it is difficult for us to see what's going on sometimes, and we really need outside eyes to help us figure out what the heck is happening and so forth. One other thing that should be remembered here is budgets can be developed in spreadsheets like Excel or Google Sheets, but normally they're going to fit in with your accounting software. So your accountant is creating a chart of accounts. The chart of accounts is going to be set up according to what are considered normal and best practices of accounting principles. But you also want to make sure you, as a head of school or as part of the admin team, you understand what they're doing and what's going into every single element on the chart of accounts. And you want your budget to be corresponding to the kind of reports you're going to get out of QuickBooks or whatever software you're using. So it's easy for you to run a report of budget versus actual. And are we above or are we below or are we on target? You want it to be easy. You want minimum time spent to get the raw data. And then you want to spend the good time looking at what does this all mean. Again, we're here to help. If you ever need someone to help you take a look at what you're doing, talk to your CPA, talk to your finance committee. That's the kind of thing we really enjoy doing, to try to help schools to turn the headlights on and make sure that you're not likely to fly into a mountain, because that's very, very stressful.
Okay.
All right, Mark, thank you.
You're very welcome. I appreciate everyone's thoughtful contributions today. I'm reachable at, I'll put my email address into the chat. If anyone has any questions, and of course, you can always reach out to the Montessori Foundation.
Absolutely. Well, thanks, everyone. We will see you all, not next week, because next Thursday is the American Thanksgiving. So we're going to skip next Thursday. And we'd love to hear from you when you log off of today's. Tell us how today went. Did you find it useful? What worked? What didn't work? And tell us what topics you would find most helpful for you, whether it's sexual harassment or legal issues or financial issues or whatever we can do to help. This is a general topic for independent school leaders on every single aspect of running an independent school, Montessori or otherwise. Thanks so much for joining us. This is Tim Seldin from the Montessori Foundation, thanking my son, Marc Seldin, and my brilliant colleague, Dr. Lindsay Pollock. Not that Marc Seldin is also brilliant. He is. Thanks everyone for being here. We appreciate you so much. And Clint, wherever you are, thank you so much for all the help you give us in bringing this together every week. We'll see you in 2 weeks, everyone. Bye-bye. And Mark,